All right, this new strategy is crazy. I was able to make a little under $3,000 just this week alone across my accounts using this strategy. Now, this was something that I didn't really want to talk about until I perfected it, and I think it's safe to say that it's at that point now. Now, those of you that are in my trading community already know that most of my trades take anywhere from like 10 to 30 minutes, and for me, I'm completely fine with that because I'm consistently making money, it's okay, and I know how to leverage properly to make the most out of that time. But my usual trading strategy that I stick to really only works on the higher time frames, like 15-minute, 5-minute, and so I'm sitting here thinking to myself, how great would it be if I could scalp in and out of a trade, make all of the profit that I usually make, but only in minutes? So I kind of put together all of the knowledge I had in my brain from my past 4 years experience of trading, and I started working on testing a new strategy. Now, I need to make this clear. This will not work for you if you don't have time to sit in front of the computer and watch every second of the market. Now, I don't mean that you have to sit at your computer all day long. But what I mean is when you're getting ready to get into this trade and you see that the strategy is lining up for entry, you need to be able to take a pretty precise entry and a pretty precise exit. This doesn't have to be down to the millisecond, but I've definitely found that you get the best entries if you're paying close attention. I also learned during this back testing process that this strategy can literally work on almost every single time frame. And yeah, I'm probably not the creator of the strategy. I'm sure there's other people that use it, but so far the way that I've perfected exactly every step has worked wonders. All you're gonna need for the strategy is TradingView, 2 to 3 indicators, and literally any trading brokerage. I personally use Blowfin. It's been great to me. If you guys want to sign up for it, links down below. I'm not going to waste any more of your time because the strategy is nuts. Let's jump into it. All right, so now that we are on our charts, we're going to jump straight into the strategy. But before we do, there are 2 important rules. I will explain all the lines and everything on my screen. It's not as complicated as it looks. I promise it's very simple. 2 rules first. If you guys don't follow both of these rules, not just one of them, both of them, this strategy will not work consistently for you whatsoever. It just won't. Rule number 1, if you are going long using this strategy, you have to be over the 200 EMA. What is the 200 EMA? It is right here. I will explain it in just a second. This purple line is my 200 EMA. We can see that price is over the 200 EMA. So if this strategy lines up for me, it would be safe for me to go long, not short. Same thing vice versa. As you can see, if we are coming under this 200 EMA line, I can go short here. That is fine, no big deal. But let's say we're under the 200 EMA, like right here. Can I go long? Absolutely not. Never. I don't care how perfect the setup looks. You can't do it. Now for extra confluence, you can say the same for the 8 EMA, which is this white line here. As you can see, we have a purple line and a white line. For extra confluence, this isn't mandatory, but I do like to try to make sure that price is over the 8 EMA as well. Almost 95% of my trades, I make sure it's over the 8 EMA. Rule number 2 that you have to follow if you are going short, not only does it have to be under the 200 EMA, but you also have to be in a consistent downtrend, right? We can see here, we are clearly under this purple line, under the 200 EMA, but you can see that we are slowly starting to build an uptrend. Is that okay to go short? Absolutely not. Same thing, vice versa. If we are going long, we have to be over the 200 EMA, right? But we also have to be in an uptrend. Now that those 2 rules are out of the way, let me explain everything that's on my screen here. Please follow those rules, otherwise this won't work consistently whatsoever. So I just briefly went over the EMAs here. If you want to add EMAs onto your screen, all you have to do is click indicators, type in EMA, click moving average exponential, drop down your little tab here, and then from there you're gonna click this little settings tab and change this length to 8. Do the same thing for your 200 EMA. Open another one, change the length to 200. You can also go in and change the style if you want. I typically like my white line to be the 8 EMA, so this one's white. You can change the thickness, whatever. That's all just preference. But since I already have those 2 set up, I'm gonna keep those here. Now you're also gonna see a lot of green and red and gray lines. There's BOS, which means break of structure. I'll get into that. There's these 4 green lines here, which are demand. Pretty self-explanatory, but I'll go over it. And this red line up here, which if I zoom out, you can see is supply. Now, when you're trading using this strategy, I highly, highly recommend that you have all of your supply and demand zones marked out, which is what I have right here. Break of structure just means that there was either a supply zone or a demand zone here, and it broke through it and closed. That's all that means. But the biggest thing you're gonna need is supply and demand, support and resistance lines in the strategy. I recommend going on like every time frame, 5-minute, 15-minute, 1 hour, and maybe 1 day, going through and marking off these levels like I have here, just to kind of give you the best idea of where the key levels are in the market, just in case you want to stay away from those. But as you guys can see, this is actually an indicator. I can toggle it on and off. This is my no limit trade supply and demand zones indicator. I've been thinking about giving this out to you guys for free, so let me know if you guys want it in the comments below. It's super helpful. You don't have to chart out anything. It kind of just does it for you. It's really awesome. Anyhow, getting into the strategy, now that we understand everything that's on the screen, I will say I love and I really prefer trading the strategy on the 30-second and 15-second time frames. But the thing that I love the best about this strategy is that you don't need any specific time frame to trade it. You can trade this on the 1 hour, on the daily. The only thing is, obviously, the higher time frame, the longer the trade's going to take. And I like to be in and out of these trades within seconds, minutes, most of the time not seconds, but minutes, 10 minutes max, 15 minutes max, in and out, quick profit, done. So for the sake of me explaining this, I'm going to show you guys on the 30-second and 15-second time frames. So how and where does the strategy take place? Where does it work? How does it work? How do we execute it? So obviously the first thing is we need to be in either an uptrend or a downtrend. That is absolutely mandatory. The other thing is that if we are in an uptrend, we have to be over this 200 EMA. If we're in a downtrend, we have to be under it. But that's not exactly how this strategy necessarily works, because we can't just say, okay, well, we're over the 200 EMA here, we're in an uptrend, let's just enter long. Because let's say you enter right here, you might be getting a really shitty entry, only getting a small move and then a big pullback down. Maybe this is going to end up reversing, going back down. So how do we find the perfect entry using all of these things combined? So the first way that I really prefer using this strategy, there's like 2 to 3 ways that you can really trade this, but the first way is when these EMAs cross, right? So you can see the white line and the purple line. They are crossing, intersecting. This is like the most consistent way to do this, so I'm going to explain that. The whole meaning of EMAs crossing, as you can see here as well, this white line comes below the purple line. They're crossing over. They're making like a T or an X in most cases. That just means that the overall price trend is shifting or reversing. And it's great having these indicators because when you can see the actual confirmed reversal point, or almost all the time confirmed reversal point, you can get like the earliest entry possible on a really big move down. So right here, I can see that we were in an uptrend, but now we started a downtrend, had a leg back, came back down, broke this most recent low here on this trend, and we actually broke below the 200 EMA. So that is crucial. We broke the 200 EMA. We are now closed below it. And we are also under the 8 EMA as well. So we're in a downtrend, we're under the 200 EMA, we're also under the 8 EMA, so everything is lining up right now really good. From here, I can see that we have really good volume, really good momentum, and we're making a good push down. So I'm gonna go ahead and enter here short. Now, our short entry would be right here because as we can see, we are lined up on this candle directly to where this EMA crossed over, so we can finally see the EMA cross. I would get in short here. Now, where does my stop loss go? Where do my take profits go? When do I get in? When do I get out? So our entry is here. You can do one of two things. I have found the most consistent success with setting my stop loss just above the 8 EMA, and this just so happens to be right at the 200 EMA. So you can see my stop loss point from entry is practically right there, but our second candle moved down. We are right above the 200 EMA, and we are well above the 8 EMA here at this point. So what I'm going to be looking for here next for my all-out final take profit, everything is gone, is I'm going to look for the biggest bounce zone. You could call it demand, you could call it support, whatever you want to call it. I am looking for the next biggest zone. So this is like a fairly good bounce here, which we're going to get to in a second. This actually plays a part in the trade as well. But if I zoom out a pretty good amount, I can see that we bounce 1, 2, 3 times, and every time we bounced really hard here. So I'm looking at this zone for my all-out exit point. Now, instead of bringing my exit point all the way down to exactly that line, which we can see is perfectly marked out for us because of the indicator, instead of doing that, what I want to do is I want to take this up a notch. I want to take it a few ticks up, just because a lot of times when you have a really big zone that a lot of buyers are coming in, or sellers if you're going short, I mean long, sorry, not short. A lot of the times at these zones, from what I've tested so far, it tends to really start bouncing hard at those levels. In this situation, that didn't necessarily happen, but in most cases it does. So now we have our entry, our exit, and our stop loss. As you can see, this is already a 6.2 to 1 risk to reward ratio, which is really, really huge. So now you might be wondering, okay, so do you take entry and then just hold the entire way down? Or do you take trims? Do you cut some of your trade to secure some profits along the way? And the answer to that is absolutely yes. So what I typically like to look for is the exact same thing as what we looked for down here. As you can see, we have this wouldn't have been a break of structure in the moment, but we have this break of structure line. So what I would have done is placed a take profit just above, a few ticks above. So this would be our take profit 1. And in this specific trade that I'm showing you guys, there's not another one of these. I mean, I could zoom out and really look for a smaller one, but most likely I would only be taking 1 take profit here and then closing the rest of the trade here. Now, there are some instances where, for example, let's say we took this trade all the way down to here, which I would never do. We would have a take profit here, just above this. We would have another take profit just above this level, and then another take profit just above this level. So hypothetically, if we were to have taken this trade, we wouldn't have gotten the full exit with our full amount that we wanted to, but we would have hit literally every single take profit. I'm telling you guys, this strategy is so consistent and it's so great. Now, what do I do with my stop loss? Let's say I have a big trade like this. I'm looking for a really big take profit, really big final exit. Do I keep my stop loss here? No. So I can't actually drag this all the way down on TradingView, but what I would do is after my first take profit, I would move my stop loss to break even. In most cases, take profit, move stop loss to break even. Then once my next take profit hits, I move my stop loss to my last take profit level. So let's say hypothetically, again, I had another take profit right here, and this was TP2. Take profit 2 is right here. So let's say we come down, we push, boom, we hit our second take profit. Now my stop loss went from all the way up here to we moved it down to break even on this first take profit. And now we're going to move our stop loss. I know this looks weird because I'm on TradingView, but now we're going to move that stop loss down to the first take profit since we got our second take profit, so on and so forth. We'd continue to move this down to take profit 2, and you continue from there. So to recap this entire process from start to finish, we need to be in a trend, either an uptrend or downtrend. If we're in an uptrend, we go long. If we're in a downtrend, we go short. Second thing, we need to be under the 200 EMA. That is crucial. Or above, obviously, if you're going long, vice versa. Next, being under that 8 EMA, but also having the 200 and the 8 EMAs cross. And finally, setting up the best entries and the best take profits using your previous support and resistance zones. Another thing to note and to really be cautious of is your timeframes that you're trading on. Obviously, if you're trading on a 30-second time frame, you're going to want higher leverage. I'm usually trading like 25 to 35x when I'm on the 30-second time frame, just because they're really small moves. When you look at the market as a whole, it's a really small move, getting like a 2 to 3 minute move. But if I was trading this on the hourly, for example, I might be using a much lower X, like 3X, 4X, 5X, 6X, 7X, something like that. Now, if you don't know how to determine that and you don't want to do a bunch of testing, this is a really great way to do it. This is kind of like an extra bonus tip that I'm going to give you guys at the end of this video, which is now. Let's say you want to take the move hypothetically from here. We're crossing the EMAs, keep your stops here, whatever, wherever you want to put it. And we're taking this up to here, for example, right? So we got in here, our final take profit is here, but how much did we actually move percentage-wise? Well, if we go and click on this, we see we moved 7.39%. This is on the hourly, right? So for me, I would go in and I would determine how much am I willing to lose on this trade. Let's say our stop loss was at negative 1% on Solana. Okay, am I comfortable losing 10% in this trade? Yeah. Am I comfortable losing 20% in this trade? Sure, but that's my max. Okay, so my maximum is a 20% loss in this trade. I never base my percentage gains or my leverage setup strictly off of the gain, because that's never going to be good. If you want 200, 300% out of your trade, that's great. But if you have your stop loss set at 70%, that is not good. So hypothetically, if we were to get into this trade with 20x leverage, this negative 1% stop loss would be negative 20%. This 7.39% gain would be about 150% gain on your profit. This is another reason why I really like these trade setups, because they are so good with risk to reward, right? When you have a 7-to-1 risk to reward ratio, that means that you can take a trade 6 times in a row and lose every single time. But that 7th time, if you take that trade, you're making all of your profit back. And in my experience using the strategy, I lose maybe 1 in 7 times, right? So that profit is always there. I think overall that is pretty much everything to wrap up the strategy. If you guys enjoyed it, please let me know. I've been testing this. I want to know how you guys do with it. But so far, it has been amazing for me. Also, if you guys want to trade live with me every single day, Join the community is the first link down below. And if you guys are still watching to this point, I want to give you guys an extra thank you for being here. If you click the first link down below to join the community, use this code here right on the screen. It is TEAM, all lowercase, and you guys will get 50% off of your membership. That is only $30 to join the community. So thank you guys so much for watching. I really hope you enjoyed the video. If you guys want me to make any other different types of videos, leave it down below in the comments. I'll see you guys in the next video. Peace out.